Should we kick off with the shilling heading towards that $100 mark or 100 unit mark? It looks like at this stage. Is this a case of Kenya being a victim of the global sell-off in emerging market assets that we're seeing?
Well, both ways. I think there's very high demand for the dollar, and that's really hitting us hard. We have internal shocks which have contributed, but we are also getting the external shocks in terms of the European debt issues, and all this is actually adding up. And to be honest, the central bank is actually, in as much as they might be doing probably too little, too late, or injecting or trying to, you know, shore up the shilling, it tends to end up being futile a lot of the time, because you never know where the shock is going to come from. So I think they're really doing a balancing act, and we just hope that something is going to come, and I don't know what they're going to do to sort of stop this trend.
I'm sure they must be pulling their hair out and having sleepless nights. Let's turn our attention to the equity markets. Kenya is looking to explore upstream, looking to buy offshore oil exploration blocks in the Lamu Basin, a 40% stake there. Now, this is a company that has been battling to defend its market share on the downstream side of the business. Do you think investors might take kindly to the news that it's looking at upstream opportunities for growth?
Well, I think that is dependent on the fact that it's the global or the mother company that is interested in the blocks, and I think that well, any exposure is really good for the market. But again, I think at the end of the day, what really hit Total Kenya is, first of all, the acquisition of Chevron. I think did have some effect, or they had some hiccups in terms of logistics and the new capacity, and I think that is not going to be a long-term issue. At the same time, I think Ken Okobil still has a very strong edge in terms of bulk purchasing, and in terms of in terms of economies of scale, which is actually giving them an edge. But also the smaller players have begun to come in strongly, and I think Total still has a lot of fighting to do for market share.
Has Total come out with a new strategy to defend its market share on the downstream side of the business?
Well, not that we have heard of, but I think at the end of the day, they do have a quality product. They do have a quality, a very strong distribution network, but I haven't seen them actually come out on the market very strongly. We have been seeing other players being very visible in terms of the products they're offering. I haven't seen Total do that, and we still are to see what they're going to come up with as a way to defend their market share.
Looking at those two stocks, we've got Total at 19 shillings 5 cents, Kenel 10 shillings 30 cents, Total down 34% for 2011, and we can see the preference for Kenel in the fact that it's up 2.5% for 2011. Would you be buying either of these stocks at these prices?
Well, they have a very different characteristic in terms of how their stock prices actually behave. First of all, Kenel has a very strong growth characteristic. It is still a young company. It is very widely diversified across the region, and they are taking advantage of the economies of scale. On the other hand, Total Kenya, which has been one of the highest dividend payers on the market, has continued to pay dividends, and they have continued to be one of those companies that have actually shown defensive characteristics. The share price doesn't usually lose that much whenever we are in a bad market, and it doesn't gain so much. But
well, you said it hasn't lost that much, but it's down more than the index is down this year, 34%.
Yeah, interestingly, Total's share has underperformed the market perennially. So the sort of returns I'm talking about here are more on the dividend side rather than capital gains. So investors who are looking for maybe dividend returns or returns in form of dividend and not capital gains would feel comfortable holding the total Kenya stock, but not investors who are looking for capital gains.
Let's look at the power sector. KenGen, also another stock that has really been battered this year, down 44%. It's been one of the shortlisted bidders to buy into the Nigerian power distribution network as you have privatization taking place there. What do you take of this news there? KenGen looking to invest in Nigeria when you have a power crisis back home in Kenya?
Well, I think they're just looking to diversify, and again, KenGen has a very, they do need to invest very heavily in our economy. That is undeniable, and they have been investing. But I think most of their projects are actually long-term projects, and they take time actually to be commissioned. I think they're still working on the Kipevu geothermal projects and the like. But I also think that they are looking to also find new revenue streams which would probably help them in raising the sort of muscle that they would need to invest further in our market. So I don't particularly take it as a bad move, but I still think that they should be investing more heavily within our economy, because we have a power shortage. We do need to invest very heavily in power in the country.
Samuel, for the rest of the trading day, how do you expect the market to trade today after 3 straight days of losses for the beginning of the week?
Well, I think we are right now in what is a trader's market, and so we are going to see this trend continue, not just for the rest of the week, but for a while now, maybe for the next 12 months. And what we will see is small ups and downs in which traders can actually, buy on dip and sell when it goes up, and basically just volatility, but generally a flat market until we head towards elections. But I think a lot of investors will be taking positions as they wait for what will probably be a bullish period after the elections, of course hoping that we will have a free and fair election, and that we are going to get back into a more stable economic environment.